The US dollar typically tends to fall once the Fed's hiking cycle begins. You can see in previous Fed hiking cycles, the dollar in the days running up to the decision tends to gain, and then once the first Fed hike has happened, the dollar tends to weaken out of the decision. That's because investors front run decisions. So by the time a decision is actually made, it has long been anticipated by professional investors. This is why the peak for the US dollar in a hiking cycle is often around 1 or maybe 2 months after the Fed starts to hike. So, with this in mind, could the US dollar start to show some weakness around now since the Fed has started its aggressive rate hiking cycle by signaling that to the market? Now, one argument against this is the fact that the US dollar also gains on risk off sentiment due to the Russian Ukraine crisis. Now, if that crisis worsens, then the US dollar could see further safe haven gains. However, should the Russian Ukraine risk fade, then the seasonal weakness in the US dollar could coincide with the typical weakness in the US dollar after the Fed starts their hiking cycle. Now, look at these seasonals between April the 7th and the 1st of May. The dollar has fallen a total of 16 times in the last 25 years, and the largest fall was an impressive 4.30% loss in 2003. So don't forget, with seasonx.com, you can analyze these charts by yourself. Just go to seasonx.com and get a no strings attached 3-day free trial, and you can look for seasonal patterns in equities, commodities, currency pairs for yourself. Remember, don't just trade it, but season exit. The major trade risk to this outlook is if there is an escalation on the Russian-Ukraine conflict, then investors can typically expect the US dollar to gain on safe haven flows.